Good day, fellow investors. The market is still in pure total gambling mode. I really wanted to make this video now as the market is still open because this is crazy. We opened a few percentage points down, then there was the fake report that tariffs will be paused for 90 days, 6.45% down, then it was announced that it was a fake report, 4% down, then up 2.8%, then down 2.83%, up, then down, and now as I'm filming this, and who knows what will happen towards the end of the day, we are up again and actually in positive territory for the day for the S&P 500. And this is crazy, but the fact that we are in positive territory still shows that the buy the dip mentality is the predominant one. Everyone is looking for, okay, what will the news say, be it fake, be it real news, just to see, okay, where can I get my money, where can I put my money to work, where can I gamble for some huge fast profits. That was the denial on the fake news. Now the latest news, Trump threatens more retaliation against China for a real trade war there. But when it comes to the stock market and the cycle, I think we have obviously passed euphoria. Now there is a little bit of anxiety. However, everyone expects this is just a temporary setback. I'm going to ride the wave up and buy the dip. However, let's discuss the stock market cycle. We had huge exuberance, money printing, zero interest rates, and the market went from 700 points to the peak of 6,000 points with dividends almost a 10x over 15 years. And now suddenly things changed as there are tariffs, 16% down, touched a little bit on bear market just a few hours ago. But we have to see what will happen next. If tariffs hit the market and there is a recession, earnings go down, then we just have to look into adjustment phase for starters. Everyone is expecting the Fed put lower rates, and the stock market is key mentality that has been predominant the last 15 years. However, what if the situation isn't like that? If the Fed doesn't intervene, if the government lets the market crash, then this P ratio that we are looking at now, the forward P ratio going below 20, first, it has been much lower in the last few years, so there is still 25% room for market declines. Further, if we look at expected earnings going forward, those have been expected to grow 50% or more in the next few years on extremely high S&P 500 profit margins. If that is adjusted, and if we look at the reported earnings, then we are at 200 points and far from the exuberance there in the forward earnings, 280. These things are always adjusted for stock-based compensation and things like that. So you will always see forward earnings much higher than real reported earnings. Probably this real number will be 210. But the growth going forward is then 40–50%. And on that base, yes, stocks look much cheaper now than a month and a half ago. However, we already see some starting adjustments from analysts telling how there is no chance earnings grow in 2025. And if we look at current earnings, lower that for a recession or slower earnings, margins, costs, whatever, multiply that with a P ratio of 15, then my calculator says that the bottom of the market would be around 2,400 points. Then we have the economic adjustment. Still huge investments expected on normal global trade, things great. That might not happen. The trillion investing in AI and things like that might not happen now. That on lower tax incomes, lower profits, lower everything, might have bigger burdens on the federal budget. Larry Fink just said that most people already think that the US is in recession, and therefore we are just here. Then we have to see denial, where the Fed doesn't save you. Then fear, oh my God, the Fed will not save me and print money. Then you look at desperation of pension funds. This is -30, -40% -6%, -40, we are in panic mode, -50, -60, we are 2009 financial crisis, and then we go forward. And keep in mind, in 2012, the Fed said we need to print more money, we need to buy more financial instruments to push the economy higher and revive everything. But perhaps now there will be a bottom to that capacity of keeping interest rates at zero for more than a decade. So the stock market, still gambling mode, still far from fundamentals, still exuberant, and tomorrow we'll discuss a few scenarios.